Paul Schulte of China Construction Bank International. You've been talking here at Super Return Asia about the Chinese economy, the outlook for the economy. Are you expecting continued growth at the same sort of growth rates that we've been seeing?
Yeah, the fundamental building blocks of growth, the DNA of any economy is going to be credit. The ability to provide credit for the private sector, to buy durables, to buy homes, to have medical bills and dental bills, and to get glasses and fix teeth and go to the doctor and travel. As people gain income, the capacity to turn that income into credit is really the driving force of any economy. And as long as that credit is there, the ability to create growth is there. And if it's not there, then we have trouble. That is the problem with the West right now. The credit system is basically broken systematically throughout the entire West, with very few exceptions, if any. And so we have a world where balance sheets in the West are being repaired, and where balance sheets in Asia are being geared up. And with the dollar arrangement, with the dollar fixed currency policy that many Asian countries and indeed emerging market countries have, they are forced to receive the zero interest rate policies of the West, and therefore this phenomenon, which would otherwise already be in place, is being aggravated. So the zero rate policy is aggravating a demographic and income phenomenon that was already present.
So you're expecting deflation in the West and inflation in China?
As the Western banking system continues to deal with this insufficient capital, insufficient savings, there is a lot of pressure for banks to push assets off the balance sheet, to deprive people of credit, to take away credit lines, to reduce credit cards, to reduce mortgages. And that has a tendency to cause lower consumption, falling asset prices, and falling investment. And this is what we're seeing all over the West. The opposite again in Asia, and also in the emerging world, in South America, Africa, the opposite is the issue, where there is extremely high levels of savings, and bankers love to give loans to people who don't need them. And this is what's happening right now. Bankers always take away your umbrella when it's raining, and they always give you an umbrella when you don't need it. And that's the nature of the beast, unfortunately. And so bankers are much more willing to allocate credit cards, mortgages, business loans to corporates who have solid balance sheets, high savings rates, high levels of cash. This is the nature of the beast, and this is what's happening right in front of our eyes.
And so you're starting to see some leveraging now in China over the past few months?
Yes, in recent months what we're seeing is, I think, a little of return of animal spirits. Asia's been through a 10-year drought of credit, basically. You look at Hong Kong. Hong Kong had negative credit growth from 1999 all the way up until 2004. And even in the last 2 to 3 years, credit growth has been close to zero. And so credit growth right now is starting to pick up for the first time, really above 10% in a decade. And so we're seeing people now having a little more confidence in taking out a loan for a mortgage, for Hong Kong properties, for China properties, for properties in Southeast Asia and properties in South America, even in Los Angeles and perhaps Florida, bottom fishing there. And so that's what we're starting to see right now, is a little bit of a return of animal spirits, a willing to take on leverage. The bottom line in Hong Kong is that we have about 3 million adults who've got savings rates of 25-30%. Give an example, that is basically equivalent to $100,000 US per person, man, woman, and child in Hong Kong, in the deposit system in Hong Kong.
In terms of China's economy, is the property market the number one driver, as we heard at this conference?
The infrastructure program that China embarked on in 2009, which was the emergency lending measures, was about 800 billion US, and of that, about 45% was spent on infrastructure. And so that, infrastructure construction was a very big part of the growth in the last 4 quarters. So the growth rates would have been something on a quarterly basis, 12 to 14%. That's coming down very dramatically as this money gets spent out. And so the larger portion of the growth rate starting about now into 2011 is going to be coming more from consumption and less for investment.
In the session you mentioned agriculture, food supplies, food safety, the environment as being sectors. If you were in private equity right now, would you be putting your money into those?
I would be creating alliances with large food producers in their ability and their willingness to not only embark on programs in genetically modified seed technology, hybrid seed technology in China, but also in other parts of the world. Chinese banks and Chinese entities are looking to create agricultural output not only in China, but also in South America and Africa. And so siding with international Chinese companies is going to be the future for the next many, many years as China deals with its number one issue, which is food safety and food supply. The other part of this is pharmaceuticals. Pharmaceutical supply is part of this as well, and so the stamping out of illegal drugs, illegal counterfeit drugs is another big effort that China's putting into this, and there's a lot of fascinating new technologies to eradicate counterfeit pharmaceuticals.
So on the whole, you seem pretty bullish about China.
I am a very, very big believer that credit is the main driver of political stability, and I think history shows that to be true. Look at what's going on right now in Europe. Germany has no majority party. France has no majority party. The UK has no majority party. Ireland is a shocking mess. Spanish politics is a mess. When you have no access to credit, that is when you begin to jump up and down and scream and replace politicians and the US. The Tea Party is a classic response. This has happened in Asia in the 1990s during the Asian crisis. When I was here in the 90s, I watched Suharto's government go down. You watch the KMT go down. You watch the Korean government go down in flames. You watch Malaysia's government being torn up. Thailand's government fell. So every government in Asia fell between 1999 and 2000 precisely because the banking system collapsed. Banking crises are very, very expensive, and they are very politically destabilizing. That is what is going on right now in the West.
Paul Schulte of the China Construction Bank International, thanks for joining us.